Hello everyone, welcome to this video on IMF report on the global financial stability. Okay, so this is the global financial stability which is being released by the IMF, which is International Monetary Fund. So we'll be having a discussion related to this report in this particular video. Before I start the discussion, if you are preparing for your RBI Grade B examination, you can check out our course and you can start your journey with us. You can download the Oliveboard application and there you will be getting all the PDFs related to all the YouTube sessions. You can also download the previous year question paper and start your preparation right now. You can also join our previous year question sessions. All the live sessions are being uploaded on the YouTube channel. Okay. So this report is related to the theme is enhancing the resilience amid uncertainty. So we all know that there are a lot of uncertainties going in the global market. This report is pertaining to April 2025. So IMF publishes this report 2 times a year. One in October and the second report is in April, right? So this report is of April 2025. अक्टूबर 2024 की ऑलरेडी रिपोर्ट रिलीज हो चुकी थी पहले, राइट? अब जो अगली रिपोर्ट आएगी वो कब आएगी? अक्टूबर 2025 के अंदर आएगी. मुझे लगता है एग्जाम और के हिसाब से आपके लिए यही वाली रिपोर्ट रिलेवेंट रहनी चाहिए, राइट? सो गो फॉर इट. You need to at least know the basic things, the key pointers from this report, and that's what we are going to discuss in this particular video, right? We can see here that global financial stability report is a survey. Okay, so it's a survey by IMF staff. IMF staff is doing this survey, like whatever things are happening in the globe, how they are related to the financial stability, right? How different financial stability of economy position is being monitored by IMF staff, and it is published twice a year. Okay, they are publishing it twice a year. I already told you the dates, months, right? So the report draws out the financial ramification of economic issues highlighted in the IMF World Economic Outlook, right? So we'll be having a discussion about that. Economic uncertainties and financial volatility. So I have taken this chart from the report. It is showing the economic uncertainties and financial volatility. If I talk about the October Global Financial Stability Report, October 2024. So as compared to October, the financial volatility and economic uncertainty has been increased, right? The maroon, the red wala chart is of April 2025 and the green wala is of 2024. So you can see that there is a uptrend in trade policy uncertainty. We all know that. Economic policy uncertainty, geopolitical risk index, again there is an increase. VIX index, again there is a substantial increase. You can see. What do you mean by VIX index? It is nothing but volatility index. Okay, it shows how much volatility is there in our financial markets. Let's suppose a high amount of financial volatility is there, then the VIX will be quite high, and that's what we can see. As per the latest report, the VIX is very high. Okay, in India we also call it as India VIX. We also do have a parameter for calculating the risk estimate, what is the current scenario of volatility in the market. That's called India VIX. Okay, so this is global VIX basically. So here is the executive summary ke key highlights. Okay, so there is an executive summary which is there in the report. I have taken the crux of that particular summary. So the first point is global financial stability outlook. So what is the outlook for the global financial stability? The risk remains elevated. Okay, so the financial stability risk is still there, it's still up. Okay, so it remains elevated. Concerns have increased due to geopolitical tensions, tighter financial condition and fragile investor sentiment. Okay, so there is concern related to financial condition, there is concern related to geopolitical tensions and investor sentiments, right? Resilience of financial system is being tested by slowing global growth. So global growth is also slow, rising inflation across the world, across the globe, and restrictive monetary policy. So these are the broad global financial concerns being stated in this executive summary. Okay, second one is core financial sector challenges. What are some of the challenges that are being highlighted in the report? Challenge related to non-bank financial intermediaries, posing a systemic risk. Okay, so NBFIs, non-banking financial intermediaries, are posing a systemic risk. Why they are posing, definitely we'll be discussing in this report. Next is related to commercial real estate. The exposure remains a concern for the bank and the NBFIs. Okay, and market liquidity, it's still under strain due to reduced market making capacity and high interest rate volatility. So they have highlighted the concerns regarding core financial sector, NBFI, CRE, which is our commercial real estate, and market liquidity. So this report is broadly divided into two chapters. The chapter 1 is concerning with enhancing the resilience amid global trade uncertainties. How to be resilient, how to build your resilience amid the global trade uncertainty, and chapter 2 related to geopolitical risk, basically implication for the asset prices and financial stability. Okay, so we'll be discussing the broad points from the report. The first thing is I have pasted both the things, my summary as well as the screenshots from the report, and also the screenshots are highlighted with the important things. Okay, so global financial stability risk have increased globally significantly, primarily due to tightening of global financial condition. So there is some tightening of global financial condition as per the IMF growth at risk model. So IMF is using the growth at risk model, and in that we can see that there's a tightening of global financial condition. The second concern is some financial institutions could come under strain in volatile markets, especially the highly leveraged ones. What do you mean by highly leveraged? Those financial institutions that have taken high loans. Okay, they have taken high loans. So definitely if there is volatility in the market, these kind of highly leveraged, highly loan taking financial institutions can face a strain, right? They can definitely face a strain in these volatility market. Third problem is further turbulence could descend upon sovereign bond market, especially in the jurisdictions where government debt levels are high. So in the jurisdictions where the government debt levels are high, basically जिस गवर्नमेंट में ज़्यादा लोन ले रखा है उनको ये चीज़ प्रॉब्लम कर सकती है. सॉवरेन बॉन्ड मार्केट उनको काफ़ी यहाँ पे वॉलेटाइल दिख सकता है. So there are some recommendations as well in the policy. They have stated that the policy toolkit for mitigating the financial stability risk include the policies for market infrastructures and exchanges that ensure market functioning and prudential supervision and regulation of financial institutions. So they are focused on the supervision and regulation of the financial institution and building liquidity, emergency liquidity and crisis resolution tools as well. Authorities should prepare to deal with financial instability. So the authorities, who are the authorities? Definitely the government and the majorly the central banks of all the countries, right? They should prepare themselves to deal with the financial instability by ensuring financial institutions are ready access to central bank liquidity facilities. So definitely the central banks should be having the ready access to liquidity facility. That's why the RBI is also cutting the interest rates so that the banks can get credit at a cheaper rate of interest, right? And by being prepared to intervene to address severe liquidity or market fluctuation stress. So the central banks also needs to be prepared to intervene in the severe liquidity or market function stress, right? Especially in the core bonds and funding markets, right? So these are the things that are being highlighted in the policy recommendation. These are the recommendation. Oversight body should allocate adequate resources for scenario analysis. What is scenario analysis? There can be multiple scenarios in the economy. So for every scenario, these oversight bodies, these central banks need to get themselves fully prepared, right? There should be stress testing. Like we are just testing. Let's suppose if a particular stress is there on a particular segment of the market, then how the market will react. Will they be able to cope up with the stress or not? That's nothing but stress testing to identify, quantify and manage the geopolitical risk. Emerging markets and developing economies should continue the effort to deepen the financial market. So if you are in the emerging market side, if you are from the emerging markets like India and developing economies, we should continue to effort to deepen the financial market and maintain a adequate fiscal policy space here, right? And international reserves to cushion against the adverse geopolitical shock. So we must be having adequate cushion in terms of reserves, in terms of international reserves, right? So that we can definitely make a hedge against any kind of geopolitical shocks. So here is the IMF Executive Board discussion of the outlook. So this is an Executive Board discussion summary of the IMF. They discussed about global outlook at a crucial juncture. The global outlook is at a crucial juncture, right? So directors agreed that the global economy is facing internal as well as external vulnerabilities. The internal vulnerabilities is country specific. However, the external is related to the geopolitical tensions, right? Elevated पॉलिसी अनसर्टेनिटी, पता ही नहीं है पॉलिसी क्या चल रही है ज़्यादा, ऐसी अनसर्टेन सिचुएशन में पॉलिसी को स्टेबल रखना इज वेरी वेरी क्रूशल, राइट? इट्स चैलेंजिंग. एस्केलेटिंग प्रोटेक्शनिज्म, हाई डेट लेवल्स were noted as the major concerns. So they have discussed, the board of directors have discussed these major concerns here. Financial market landscape, the financial condition have tightened with stretched asset valuations and volatility, right? So asset valuation is a challenge. The asset valuations are quite high. The report says it all, that they are already stretched, plus volatility is also high. So at the time of highly volatile situations, these asset valuations can correct, right? And that's the problem. Risk of global financial stability are firmly titled to the downside. Okay, so these are the points that executive board has highlighted. Key vulnerabilities. What are some of the key vulnerabilities? As I stated, asset price correction can happen due to the geopolitical shocks. Our assets are already overstated and this is a volatile situation. So in the volatile situation, definitely our asset prices can definitely correct a bit, right? Increasing leverage and interconnectedness, especially among the non-banking financial intermediaries. So NBFIs are highly leveraged. That's again a problem, right? Leverage is both, it's a double-edged sword, right? It can amplify your returns, plus it can amplify your risk as well. Still rising the sovereign debt levels globally. So the sovereign debt levels are rising globally. Then they highlighted concern about the monetary and financial fiscal risk. Higher interest rates, defense spending, right? Higher interest rates and defense spending may raise public debt. So whenever a country is spending high amount on defense, it increases the public debt as a whole, right? So that's again a challenge. Then revenue losses from tariff and fiscal pressure. There is losses from tariff, there is losses from fiscal pressure, especially for the low income developing countries like India, right? These tariffs are hurting the low income developing countries than the other countries. Fifth is policy recommendation. So the central bank should follow a data driven, a well communicated monetary policy. So your monetary policy should be very strong. It should be data driven. It should be well communicated. Be ready to act if inflation expectation rise or financial instability appears. Use the IMF integrated policy framework for managing the capital outflows in emerging markets. You can also refer to the Basel III and Basel banking supervision. So full consistent implementation of the Basel III remains crucial. So Basel III norms are there to protect the financial stability only, right? Supervisor must monitor the bank's NBFI linkage and macro prudential risk, because NBFIs are highly leveraged. So supervisor must monitor the situation continuously here. Next is related to fiscal policy priorities. So advanced economies should pursue growth friendly fiscal adjustments. So the fiscal adjustments that you are doing is growth friendly, should be growth friendly. Emerging market should reform tax system. So if you are an advanced economy like US, UK, then definitely you need to follow the growth friendly fiscal adjustments. However, if you are from the emerging market side like India, you should reform your taxation system, phase out subsidies and safeguard the social spending here. So try to increase your revenue by tax systems, by optimizing the tax systems here. Structural reform and global cooperation. So the next point is structural reform and global cooperation. Reform to increase the labor force participation. So you need to strive at a higher participation rate of the labor force, especially in women and elder, right? Enhance the climate resilience, digital infrastructure and transparent trade policies. So this report is a big report, okay? It's a 100-page report. We need to read the key pointers here from the report, okay? Strong emphasis on the multilateral corporations like trade, like tax and development, right? So these were the things that were highlighted by the board of directors, right? So this was the executive summary of the board discussion broadly. Then I told you that this report is divided into two parts. So the first chapter is related to enhancing resilience amid the global trade uncertainties. So there are already a lot of uncertainties in the market as a whole, right? How we can stay resilient, how we can stay strong in this global trade uncertainty is what chapter 1 discuss, right? So first we will be discussing about whatever problems are there, and simultaneously we will be discussing about what policy has been framed to address those problems, right? Then we have the backdrop of uncertainty and volatility. So we all know that US tariff announcement made the markets too volatile, right? So there was a sharp global equity sell-off, spike in the financial market volatility across the globe, widening the corporate bond market spread. What do you mean by spread? So this is nothing but a bid-ask spread. Buyers kitne pe or sellers kitne pe? That's nothing but spread, right? Corporate bond spread. Depreciation of the EM currencies and a lot of things that we have witnessed because of these tariff announcements, right? So three key vulnerabilities has been identified. The first is further asset price correction. We saw that already the assets valuation are highly overvalued, and we can here see the asset price correction. So the first key vulnerability, right? US stocks were trading at 80 percentile of the forward PE ratio. What do you mean by PE ratio? PE ratio is market price per share divided by earning per share, right? So let's suppose if we are earning 1 rupee per share and our market price is 50 rupee, that means the PE ratio is 50 times, okay? The PE ratio is 50 times, that means. Equity risk premiums compressed to a historical low level. A global decline in the long-term earning expectation noted a post-tariff. Sharp repricing possible if growth disappoints the present scenario, or uncertainty persists. Right, so these were the major concerns that were highlighted. The main point is further asset price correction, कि आपकी asset prices के अंदर further correction भी आ सकता है. IMF growth at risk model shows a sharp rise in the downside. So the 5th percentile year of the global growth forecast was 0.4% down from the 1.2% in October 2024. So this is again down, right, as per the IMF growth at risk model. Okay, so then we have the next vulnerability, which is strain on highly leveraged financial institutions. So our financial institutions are highly leveraged as per this report. The hedge funds and asset managers have increased the gross notional exposure here, right? So they are highly leveraged. What do you mean by leverage? Taking loans and then investing, okay? US Bank lending to NBFIs is 14% of their CET1 capital, right? Core Tier 1 capital. Focused deleveraging due to margin calls can trigger liquidity spiral. So because of the forced deleveraging, what is forced deleveraging? Let's suppose you have taken a long position, you want the market to go up, however because of the volatility in the market goes down. Now this will trigger the margin calls. This will trigger the margin calls. You need to give more and more margin on your position to hold your position. This is a forced deleveraging, right? You have already taken a loan, you are already on a leveraged position, and now you need to pay the margin calls here. You need to deleverage yourself, right? So this can also trigger liquidity spirals here. Some of the hedge fund strategy have also shown up to 10x leverage, and that's huge, right? Turbulence in the sovereign bond market. So popular leverage trades are vulnerable to sharp unwinds as of now. Swap spreads turned negative, indicating the strain in the core bond market. So these were the key points from the turbulence in the sovereign bond market. So this was a key vulnerability, that there is a turbulence in sovereign bond market. Gold याद आ रहा है बार बार आज, राइट. अगेन अगला फाइनेंशियल स्टेबिलिटी इंडिकेटर, तो हमने इसके बारे में ऑलरेडी बात कर ली थी कि ग्रोथ एट रिस्क मॉडल फॉलो करता है IMF ग्रोथ एट रिस्क मॉडल. उसके अंदर जो की फिगर्स थे हमने डिस्कस कर लिए थे, दैट ग्लोबल ग्रोथ फॉलिंग बिलो 0.4% इज द प्रोबेबिलिटी दैट IMF हैज टेकन. अर्लियर इट्स अ शार्प ड्रॉप. अर्लियर कितना था, 1.2% था इन अक्टूबर 2024. अभी कितना हो रहा है, 0.4 हो रहा है, राइट. क्रिप्टो एसेट्स एंड रियल एस्टेट की अगर बात करें तो बिटकॉइन हैज सर्ज्ड एंड इट हैज आउट परफॉर्म द अदर एसेट क्लासेस. वी कैन ऑल्सो हैव अ लुक एट द चार्ट. द ग्रीन लाइन इज डिपिक्टिंग द परफॉर्मेंस ऑफ बिटकॉइन हियर, राइट. सो बिटकॉइन ने एक सारी एसेट क्लासेस को आउट परफॉर्म किया है डेफिनेटली इस पीरियड के अंदर भी. द रिस्क एडजस्टेड रिटर्न सरपास द गोल्ड एंड US इक्विटीज. The market cap of stable coins crossed 200 billions. What is stable coin? Any idea? Let's suppose if I talk about USDT, which is also called as Tether. Okay, इसको Tether भी बोलते हैं, USDT, right? So ये stable coin होता है. What do you mean by stable coin? इसको ऐसा माना जाता है कि हर एक USDT के पीछे एक US डॉलर की बैकिंग है. So that's a stable coin. इसके अंदर ज्यादा वोलेटिलिटी नहीं होती है, right? सो अगर ज्यादा वोलेटिलिटी होती है, अगर डाउन साइड हो रहा होता है, तो लोग क्या करते हैं, दूसरी क्रिप्टो करेंसी से मूव करके USDT पे आ जाते हैं. ये भी एक क्रिप्टो करेंसी ही होती है. ओके. कमर्शियल रियल एस्टेट, अगेन द वैल्यूज फेल अक्रॉस द मेजर इकोनॉमीज. द CRE लोन्स रीफाइनेंसिंग रिस्क रिमेन हाई, स्पेशली इन द US रीजनल बैंक्स. ओके. सो द कमर्शियल रियल एस्टेट के अंदर भी डाउनफॉल देखने को यहाँ पे मिला है. रिस्क वेट्स डिराइव्ड फ्रॉम द इंटरनल मॉडल्स में ओवरस्टेट द बैंक्स कैपिटल बफर्स. अब क्या होता है, देखो हम RWA मेंटेन करते हैं, राइट, रिस्क वेटेड एसेट्स. अभी हम कैपिटल एडिक्वेसी रेशियो जब करते हैं, कैपिटल एडिक्वेसी रेशियो जब कंप्यूट करते हैं तो कैसे निकलता है, हमारी कैपिटल डिवाइडेड बाय द रिस्क वेटेड एसेट्स. ओके. सो मोस्ट ऑफ द टाइम्स दे आर डिराइव्ड फ्रॉम इंटरनल मॉडल्स, right? So the bank capital adequacy ratio could be overstated. Why it is overstated? Because this RWA is understated. It is underestimated. जितना कम मेरा RWA होगा उतना ज्यादा मेरा कैपिटल एडिक्वेसी रेशियो होगा. सही है कि नहीं? मैथमेटिकली जितना डिनोमिनेटर कम होगा उतना ज्यादा आंसर निकलने वाला है, राइट. सो अगर आपने रिस्क वेट्स को अंडर एस्टिमेट कर लिया, रिस्क वेटेड एसेट्स को गलत निकाल लिया, अंडर एस्टिमेट कर लिया, नॉट गलत निकाल लिया, अंडर एस्टिमेट कर लिया ड्यू टू इंटरनल मॉडल्स, नाउ दिस कैन डेफिनेटली ओवरस्टेट योर CAR, which is not at all a good thing. You are maintaining a buffer. However, the buffer is not adequate enough because the risk weights are more and more in actual sense. However, your risk weights are undervalued, right? आपके risk weights आपने कम ले लिए, उस वजह से आपका CAR क्या हो जाएगा, ओवरस्टेट हो जाएगा ऐसे केस के अंदर. ओके. सो द डेटा फ्रॉम इंटरनेशनली एक्टिव बैंक्स हैज आल्सो शोन वाइड वेरिएशन इन द RWA अक्रॉस द बैंक्स. सो इंटरनेशनली डेटा ये बताता है कि काफी वेरिएशंस है रिस्क वेटेड एसेट्स के अंदर ड्यू टू इंटरनल मॉडल्स. ओके. बिकॉज द बैंक्स आर फॉलोइंग देयर ओन इंटरनल मॉडल्स. ये एक्सपोजर रहता है. वी कैन सी हियर इन द चार्ट एज वेल. ओके. हम इन चार्ट के अंदर भी देख सकते हैं. These are related to risk weighted assets. Densities continue to decline and vary substantially across the banks. Next is growing linkage between the banks and the NBFIs, increasing the risk of contagion. Okay, so ये risk बढ़ती जा रही है, growing linkage between the banks and NBFIs. So over the last decade, NBFIs have shown growth faster than the banks, right? So NBFIs are growing faster than the banks, particularly the investment funds, including mutual funds, hedge funds, and private equity. Now there is a strong linkage between the banks and NBFIs, and if the NBFIs are over leveraged, in that case, then definitely they can also pose a risk to banks as well, right? Because at the end of the day, everything is linked here, right? We have seen it in the global financial crisis as well, that financial instruments, banking institutions, financial institutions all are linked ultimately. So financial stability, increasing dependence on the resilience of the non-bank financial institution intermediaries, right? So the share of financial system type, share of financial system asset by the type of institution. So we can see here that the financial institution, financial system के अंदर कौन कौन से institutions यहाँ participate कर रहे हैं. Again, interconnected private credit funds can spread the credit shock. So private credit funds are deeply interconnected across geographies and investor bases. For example, a credit event in the US based fund can lead to a valuation losses in pension funds of Asia and Europe because they are ultimately linked. The economies are linked after globalization, right? So is the financial instruments as well. So they can create a widespread impact. Even if there is a change in one instrument, definitely it can impact the value of another instruments. Asset managers' growing use of derivative increases the risk in the financial system. Do you remember that the great legendary investor Mr. Warren Buffett had said that derivatives are weapons of mass destruction? They are financial weapons of mass destruction, and the asset managers are growing use of derivatives here increases the risk in the financial system, right? Significantly expanded their use of leveraged position in the recent years by employing long future position in the treasuries and US equities. So the volume, the weight of derivatives is increasing day by day. Again, that is causing a problem, that is bringing a risk here, right? Because it can amplify the return strongly. However, it can also amplify your losses or risk as well. Then bond market, if we talk about the bond market, especially in the US and other advanced economy, are becoming more fragile due to dealer limited capacity to absorb the large volume of trade, particularly during the time of stress. We can see here that constraints on dealer balance sheets are increasing the fragility of the bond market. So there are balance sheet constraints here. Dealer are facing the regulatory capital charges like leverage ratio requirements. So they need to maintain certain amount as reserves, right? Limiting their ability to hold the large bond inventory. So they cannot just hold the large bond inventories for so long because they do have balance sheet restrictions as well. Shift in the business model. Dealers are again increasing their focus on the high margin activities like structured finance and derivatives. So they need high margins. If you want to enter a derivative position, definitely you need high margins. Impact of quantitative tightening. As central banks unwind the bond holding, more bonds are returning to the market and dealers are unable or unwilling to absorb this supply. So there is a demand shortage as well as of now. Okay, and we can see here that the dealers intermediation shift towards higher margin activities. We can see that equity margin loans is high as compared to the fixed income repos, right? So there is an increase in the data related to high margin activities. Liquidity and fire sale risk. So open-ended investment funds offer daily redemption but invest in illiquid assets. So let's suppose if you are investing in an open-ended investment fund, right? They can offer us redemption facility. They are open to daily redemptions as well. However, they are again investing in illiquid assets like commercial real estates, like private credit. So the ultimate investment, if they are illiquid, how can this open schemes be liquid, right? They are providing the redemption facility. However, in case of a stress scenario, in case of a high amount of liquidation, in case of a high amount of redemption request coming in, they will definitely face the stress, right? They can definitely burst in the stress. So scenario analysis also suggests that 25% of such funds would not at all meet a 5-day redemption if large outflow occurs, right? So that's the problem. That's a risk, right? Liquidity risk. We call this as liquidity risk. Commercial real estate pressure. So commercial real estate prices are declined in the US and similar trends are there in the Europe and Asia side as well. Loan refinancing risk due to high interest rates and falling collateral values. So commercial real estate is again a upcoming risk here, right? It's exerting a great amount of pressure. some of the policy recommendations are short-term crisis response. So the central banks need to prepare themselves for any kind of liquidity backstops, both for banks and for NBFCs. Must be ready to intervene during the severe market stress. We already discussed, I think we already discussed this thing in the board wali summary, right? Then medium term resilience, implementing the Basel III norms for enhancing supervision of the banks and NBFI linkage, and tightening the macro prudential tools in the overheated credit or asset market. For emerging and frontier markets, so build a fiscal and foreign reserve buffer. We already discussed that. Build a great amount of foreign reserves. Hold foreign assets in your portfolio to hedge against the geopolitical tensions as well, right? Strengthen the strengthening the domestic financial market infrastructure. You need to strengthen your domestic infrastructure. If you are an emerging economy, definitely you need to do that. Engage in liability management operation for smooth debt maturity. If suppose debt are going to mature in 3 year, 4 year, 5 year, you should manage it. You should manage the liability such that there is no stress on the debt maturity. You can easily deliver it. For crypto related risk, define a clear tax treatment and draft the regulatory framework. So I think India is on its way to draft the crypto regulations. I saw this in the news few days back. They need to follow the IMF FSB roadmap for institutional capacity building here, right? Okay. So next is declining enthusiasm for green investments in widening the climate financing gap. So you need to read this green box, this particular green box, you need to read this, right? So green investments, green bonds, green finance, ESG reporting is an important topic for your examination. You can try to read this box and you can also extract some lines related to green investments, right? Declining enthusiasm of green investments is widening the climate financing gap. Again, you can use this line in questions related to ESG, in questions related to green finance, right? So that's always helpful. In the next chapter, they have discussed about the geopolitical risk implications for asset prices and financial stability, right? What implications will be there on the asset prices and what will be the financial stability. So we'll be seeing this chapter 2 at a glance. Here it is written that stock prices generally had a modest reaction to the geopolitical risk events, but major events, especially like military conflicts, have disproportionately larger and persistent effect on the asset prices. So military conflicts can definitely have a huge impact on the asset prices. It can create a high amount of crash. It can definitely lead to a higher amount of volatility. Sovereign risk premiums can increase notably in response to major geopolitical risk events. So sovereign risk premiums can definitely increase in case of major geopolitical risk events, particularly in the emerging market economy. So if we talk about a country like India, if any kind of if any kind of major geopolitical risk event is there, like India-Pak war, then definitely the sovereign risk premiums can increase, right? This weakens the fiscal and external buffers. The next key highlight is impact of geopolitical risk events can spill over to the sovereign and firms in other countries as well through trade and financial linkage. Let's suppose India is facing a problem. Definitely the linked economies are highly dependent on India or doing the trade in India. Definitely they will also feel the heat because of the geopolitical risk. So all the economies are nowadays interconnected. Investors appear to price geopolitical risk in both equity and options market to some extent. However, the realization of these risks can raise the financial market volatility. So these geopolitical risks can definitely increase the financial market volatility as well. Geopolitical risk events can adversely affect stability and intermediation capacity of the banks and NBFIs, such as investment funds, potential impact on the macroeconomic stability as well. So these geopolitical risks can definitely impact the capacity of banks and NBFIs as well, specifically the investment fund. Why? Because the ultimately majority of the asset classes are being held by the investment funds only. वही तो इसको held कर रहे हैं. And here are the policy recommendations stated in the report. So the policy recommendations are: policymakers should consider country-specific geopolitical risk in oversight of the financial institutions. Financial institutions should devote adequate resources to identify, quantifying and managing such kind of risk, right? So it's a responsibility of financial institutions as well to develop such kind of resources that they can adequately identify, quantify and manage these kind of risk, right? Then financial institution to hold adequate capital, that means your capital adequacy ratio should be good enough, right? Do worry about the internal frameworks that the banks are using that can understate the risk weighted assets and can overstate the capital adequacy ratio, which is actually not there, right? The risk is high, however your capital adequacy ratio is showing that your capital is adequate, however the actual scenario is completely different, right? And you need to maintain adequate liquidity buffers as well to protect against the extreme, but these are plausible losses, right? So reasonable losses associated with the materialization of the geopolitical risk. अगर geopolitical risk materialize हो गई, so whether you are having adequate capital, whether you are having adequate liquidity buffers, so financial institutions need to check on that thing. Emerging markets and developing economies should continue their effort to deepen the financial markets. We already discussed this in the Director Wali report. Accompanied by the robust regulatory framework to help the investors manage and hedge their financial risk posed by geopolitical shocks. So you need to deepen the financial markets if you are a emerging economy like India. Adequate macroeconomic policy stance space and international reserve buffer should be maintained to help mitigate the adverse effect of geopolitical risk. So these are the recommendations, or I can say policy recommendations, that are stated in the report, right? So again, I have summarized everything for you guys, and in the last part, okay, in the last part of this particular, so these are the policy recommendations only. I have highlighted the keywords as well, plus I have included some data as well. So these are the pointer summary notes for you guys. You can have a quick reading. So I have taken this from the report itself. The major key pointers I have mentioned here that you need to study. Okay, so this will again be helpful. Give a quick reading of this report and then you can go through the summary pointers as well. So I'll conclude here. Thank you so much guys for watching this video. See you in the next video. Bye bye. Take care.